If you want to be wealthy, do what the wealthy do. In this short video, I'm going to share how a dentist mastered infinite banking. First, I'll share what infinite banking is. Next, I'll share how profitable infinite banking is. And finally, I will reveal the most important secret to accumulating wealth with no risk that fuels infinite banking. This story is not unique to just dentists. It's a story applicable to every dividend-paying life insurance policy owner. So what is infinite banking? It is a strategy how you can become your own banker. The late R. Nelson Nash discovered the best storehouse of capital to be your own banker is a dividend-paying life insurance policy. This policy has a high rate of return and with no tax. This policy is considered a sound money investment because it does not lose money. Now, technically, it is not considered an investment because it has no risk. In comparison, unsound money is money that frequently loses value. An example is the stock market. By borrowing against this cash value in this policy, you're able to regain control of the banking function from the banks and control your own financing needs. By doing so, you're able to recover loan interest, which over a lifetime adds up to hundreds of thousands of dollars. There is no other financial vehicle that allows you to do this. Infinite banking has been practiced by many wealthy individuals in the world, including Ray Kroc, Walt Disney, Ted Rogers, Jim Pattison, U.S. presidents, only to name a few. All you need to become your own banker is to start a dividend-paying life insurance policy. It's no more complicated than that. Yes, but Dave, you might say, I've heard that life insurance is a terrible investment. Well, compared to what? Dividend-paying life insurance is technically not an investment, as I've mentioned, because there's no risk. It's really a savings vehicle. But let's look at it. Since most view the stock market as the benchmark for returns, let's look at the returns of the stock market over the last 33 years, ending in 2022. In Canada, that's the S&P TSX Composite Total Return Index. This dentist implemented his dividend-paying life insurance policy in 1990. From 1990 to the end of 2022, the TSX grew by 7.66% annually. But that's not the return you would get, because there are investment management fees to pay. So if we assume 2%, your annual return then is 5.66%. But that's still not the return you would get. Since gains in the stock market are subject to tax at some point, let's assume these gains will be taxed at the capital gains rate of 25%. That means the TSX after fees and taxes earn only 4.25% annually over 33 years ending in 2022. For many, that's a shock because most expect that they would have earned 10% from the stock market annually. But that's not where these surprises end. Over the same period of time, his dividend-paying life insurance policy cash value averaged an annual return of 4.16% after fees and taxes. Now, if that's not enough evidence, I have a 75-year-old business owner who has a policy also. Over these 75 years ending 2022, the stock market returned 3.4% after fees and taxes. His policy, however, earned 4.3% annually after fees and taxes. That's almost 1 full percentage point higher. How can this be? The investment industry has told us life insurance is a terrible investment. Well, there's no conflict of interest there. Definitely is fake news. Well, the facts are the facts. People need to stop accepting what they hear as fact. They need to do their own homework. Not doing their own homework has been at their peril for way too long. So let's look at some of the reasons why life insurance is. Reason number one, losing sessions. The stock market has losing session 46% of the time every year. This chart shows you the stock market winning and losing sessions for 2023 in comparison to what I call the perfect investment, which is dividend-paying life insurance. You see, these losing sessions erode all the winning session gains. That's part of the reason right there. Further, these losing sessions are like interrupting compound interest. Albert Einstein said compound interest is the eighth wonder of the world. This illustration shows you the value of compound interest and the impact of interrupting it. Both show investing $10,000 and receiving an average annual return of 10% over 5 years. The top illustration provides an average return of 10% over 5 years, but the real return is a 3.34% loss. The bottom illustration provides the same 10% average return, but has a 10% annual real return. There you can see the difference. Second reason may be related to guarantees. One key advantage life insurance has are its guarantees. Life insurance has a winning session every day because their cash values contractually increase every day, even while you're sleeping. What guarantees do you receive for the fees you pay in stock market investments? And why would you put your money somewhere that offers no guarantees? Well, the third reason may be related to fees. Most will be surprised to learn that dividend-paying life insurance fees are significantly lower than the stock market. Related is the topic of commissions. One client told me their accountant warned them that life insurance agents earn a lot in commissions. Well, compared to what? Commissions for life insurance policies are much lower than the cumulative fees paid on investments over the years. Further, today's new dividend-paying life insurance commissions are even lower than what they were in the past. And why would fees be a consideration on the perfect investment? Since fees for life insurance are lower than the stock market, it's a non-issue. Reason 4 could be taxes. Stock market investing is taxable, as we know, including RRSPs, which I call tax-infected assets. But dividend-paying life insurance and infinite banking is tax-free when used properly. Now, I'm not going to say do not invest in the stock market. Just do it after you have your sound money dividend-paying life insurance policy in place. However, this next top reason is why you really don't need to invest in the stock market. So here's the top reason how dentists and anyone can become wealthier using dividend-paying life insurance and infinite banking, which is reason number 5. The top reason, in 3 words, risk-adjusted return. When it comes to dividend-paying life insurance, my research indicates there is no other investment that offers a higher risk-adjusted rate of return, and that's not even close. The risk-adjusted calculation is the actual return less the risk-free return divided by its risk. I use 3% as the risk-free return and standard deviation for its risk. These charts show my research comparing the dentist's actual 33-year-old policy and the business owner's 75-year-old policy to the stock market. The 75-year-old business owner's policy is even better than the dentist's example. Further, he was able to rely on his policies for cash when his bank would not provide him funds as a result of a devastating fire when the fire insurance company continued to drag their feet. I also included the value of infinite banking concept in this chart, also assuming a 6% rate of return. Now, the actual rate will depend upon the rate you would be paying on a bank loan, say, but this further adds to the value and return of dividend-paying life insurance. Again, infinite banking, which is the process of borrowing from your life insurance policy, allows you to become your own banker for your own financing needs without invasive credit checks. Since policy loan interest fuels the dividends you receive from your policies, as an owner, you are recovering this interest. The bank never returns interest to you that you pay on bank loans. So kudos to the investment industry marketers. They've convinced people that even despite the high risk, the stock market has been worth the risk because it would blow away the returns of life insurance policies. Well, my research, as I've shared, proves them wrong. In the end, why would anyone take on more risk than you need to get similar results? People diversify to minimize investment risk. Since life insurance has no risk, there is no need to diversify with any other investment. Life insurance on its own is all you will ever need to create the wealth you need and more. At worst, it's a strong buy for stock market and real estate investors. So what I've walked through are some of the attributes of the perfect investment. A chart of all the attributes of the perfect investment can be found in the video notes below. Please like, comment, share, subscribe, and turn on alerts to more great secret financial strategies to wealthy use. Please also visit IBCanada Group.com for more information on infinite banking.